Hello dear viewers, and welcome back again to Good Morning Kuwait, and we have another guest for today. But before that, so in recent years everyone seems to be talking about investing, saving and financial freedom. But with so much information online, many people feel confused about where to start and what really matters. And today we break down financial awareness and consumer behavior in a simple and practical way with Abdulrahman Almuhanna, an economic content creator known for making finance easy to understand for everyone. And welcome to the show, Abdulrahman, and how are you?
Thank you so much. I'm all right, thank you. I'm good to be here.
So tell us about this kind of awareness, where people should start in investing. Should they save right now since the market is going up really like skyrocket?
So to begin with that question, people first should understand that investing is not herding. So we shouldn't be performing or experiencing what, behavioral finance. It's a field that studies human behavior and finance especially. It's not pure psychology, and what psychologists study, it's financial experts study human behavior alongside psychologists. So they study the human behavior, and they found that a lot of investors or humans, they experience herding in markets, meaning that recently, as we were speaking earlier, gold and silver, as we know, they've been in a hype cycle. Okay, especially in recent years, gains have exceeded 100% over the past, at least in the past a year and a half. That's for silver, and more than 70% for gold. So what we want to know is that investing is not something we follow people with. This is not healthy. Okay, maybe it's good that I listen to a piece of advice from an expert, or maybe to a close friend that actually knows what he's doing or what she's doing in the field of finance. But it's but I have to be careful. If I have zero knowledge in the field of finance, I have to be careful in managing my budget and managing my financial planning and actually managing my investments, because I have to ask myself, is this investment fits my time horizon, fits my risk tolerance, fits my budgeting, and fits my investments goals? Because investing, it is for everyone, but also there is a specific people where they need to look at other things before looking at investments.
But the thing is, why do our parents and even our grandparents used to tell us, like, when you want to save, make sure that you convert your money into gold and keep it and hide it until it gets to high price, sell it again, and then do it and go back and forth. Is this kind of long-term investment is actually fallible, or is it not?
Yeah, I'll tell you something that's probably opposing to what a lot of the social media are talking about. Gold actually has no yields. It has no returns. It doesn't give you returns. Gold does not give you returns, and gold is not something that grows your outcome, and it does not grow your salary or does not grow your revenues. Gold is a store of value. Okay, gold is something that our parents and grandparents and over the past tens of years and generations, people have been used to gold as a store of value, hedge against inflation, and hedge against crises, whether be it economic crises, political crises. When we see currencies facing declines, okay, let's say whether be it the euro, whether be it the sterling, whether be it the US dollar, gold rises. Okay, even if it's economic crises, whether be it the tariffs, right now we see gold rises. Whether be it also money flow of ETFs, which is exchange trading funds, coming into place, we're going to see gold rising. But there is only one thing we have to make sure of. Gold does not give you outcome. So if I buy gold bars right now, it's not going to give me a monthly return.
No, it doesn't.
It's not like stocks.
It gives you something like in not even a year or two. You have to keep it with you at least minimum 5 years until you actually feel the value rising up.
Yeah, that's a thing. But also, one more thing, it has no activity.
No.
I mean, so if you own a stock, for example, of certain companies, without mentioning any name, if you own a stock, that stock has a base. and that company has a base and has a working activity, has a balance sheet, and has all these numbers that actually put the staff into work, and that's actually working and give you growth over the years. So the stock is rising, it's giving you returns, it's giving you dividends. Every quarter of a year the companies gives dividends, so you get money every quarter of the year, and then when you sell a few of your shares you get returns and then reinvest. But the thing with golds, when you buy your bars, you can't sell them, because when you sell them you're just gonna lose them, and then you can't buy them back because they're already at a high price. So now if you own a kilo of a gold, it's now over 40,000 KD.
Yeah,
almost like 50,000 KD now,
something like that. Yeah,
something like
that range.
If you own 1 kilo and sell it now, you'll not be able to buy it back.
Very true. Yeah, it is true. Yeah,
and you can't even sell a quarter of it if you own a whole kilo, unless you go through the process of cutting and stuff like that, and also that would cost you. So it's not something that would actually grow over the years and fight inflation and fight other things. So
it's true, as you said, it's like a one-way street. It's like, okay, you can keep it with you, you can hoard it,
store value.
But after, you can store value, but after that, if you sell it, you'll sell it one time, you can't buy it back on the old value. You have to buy it now with the new value, and then you have to reset your mind into storing it again. And then
but it's good to have it.
Yeah,
either it's good to have it, because this is when we speak about portfolio diversification. You having an investment portfolio, having stocks in your portfolio, having metals, silver, palladium, platinum, gold, having, for example, some people likes to trade cryptocurrency, trading, not mining, because it's illegal in Kuwait. Trading, having low percentage. Some people likes having, for example, other things like, for example, maybe real estate, because real estate, it grows about 10% a year. That's nothing in comparison to gold and stocks, but also it's safe. Real estate is safe.
You also talked about something very interesting before we started interviewing, that silver follows gold, and how does that actually work, and why is different type of metals more important than the other, and how do they work in the industry?
Yeah, so markets generally, they have correlations with each other. So currencies, the dollar has a correlation with gold. So if they have a negative one. So if the dollar rises, gold falls, and vice versa. Gold is the leader of the metal market. Okay, if gold has gains, silver and palladium and other metal markets, they gain as well. Gold is the driver and it has the highest assets under management, and has the highest yields and everything in the metal markets. So if gold grows in terms of investments and banks investments around the world, all the metal markets will follow, because gold is the leader of the metal markets, and it has a positive correlation with all the metals that follow, which is silver, palladium, platinum, and the likes. Also, when you go, that's not only the metal markets. When you go to, for example, the stock market, you have also the S&P 500, for example. If it rises, there is certain companies that will also follow about the S&P 500, which is mostly is going to be construction companies, also in some industrial companies. That's only because the S&P 500 is rising. So that's called a correlation in markets. There's certain research on that, actually, a positive correlation and a negative correlation. That's also in cryptocurrency the case. If you see Ethereum rising, Bitcoin is not necessarily going to rise, because Bitcoin is the leader of cryptocurrency. So if Bitcoin rises, Ethereum is going to rise. If Bitcoin falls, all the currencies are going to fall.
Yeah, because you do have to have a leader, and they led in cryptocurrency.
Because Bitcoin
also gold
is the first asset, and Bitcoin has the highest asset, and
they're the one who set the standard and the basis of the cryptocurrency.
It is the standard. That's why when it moves all the currencies. It moves all the money. It has all the money invested. What's the money? It's the same as gold.
Okay, so let's move away from metal and cryptocurrency. What about, let's talk about social media and making quick money. How is that even true, and is it good for the consumer or not?
Oh, it's not true.
Okay.
Yeah, it's not true. I think it's all advertising and marketing. I mean, usually when people go on social media, what they want to do is make quick money. And I'm not talking about regular people who wants to invest. No, I'm talking about people who want to use social media as a business. I'm gonna advertise my workshops, advertise my career that I'm seeking as a long-term investor, as someone who gives pieces of advice, as someone who gives workshops in finance, as someone who probably even hold some certificates in the field, which gives me validity, let's say. So social media people usually use these things in their favor, in terms of that they would advertise investments as an easy way to make money, and as an easy way for us to make money in terms of getting a modern life, modern cars, and modern houses. But that's only in the utopian world. That does not apply in investments at all. Not even speculation, which is the forex markets and other type of markets, and I'm not only in investing markets, which is the long-term investments or medium investment. Investing is just like any other business. You have to be dedicated. You have to have money saved up that you won't need, because saving is different to investing. You have to have money saved up that you won't need to invest on a monthly basis. It is very natural for you to watch an investor who's actually advertising a happy, modern life with modern cars and everything, to see him in real life with high debt, indebted.
That's true.
With high interest on his debt, and to be, wanting to sell his workshops. So that's usually it. They want to sell their workshops, and they want to advertise their work. And I think usually with every field, that's the aim of social media.
Well, if you have to give a final advice to our dear viewers, a short one, like what would you advise them right now and today to how to invest and how to basically monitor their investment?
So investing, as a final piece of advice, investing became very easy because it's online, it's everywhere. It's like it's one click away for you to invest, Saving is different to investing. If you think you have money that could give you at least 3 to 6 months, that's it, and you'd need it for emergencies, medical costs, work disruption, anything, do not invest. I'm not even kidding. Do not invest. The research and scientific advice is you can't invest if you would need the money within a span of 3 to 6 months or a year. You have to keep the money as saving because you'd need it in the near term. Keep it. Maybe you'll need it for any emergency. If you have a fund built for the long term and a money that you won't need for over years, invest it in the market, and you can use the dollar cost average strategy, which is investing a fixed amount of your salary, which is whether it be 50, 100 or 200 KD, regardless of the price of market. But you have to keep in mind that markets go up and down, so you have to keep your psychology still and face the ups and downs of the markets, and with your money invested in it.
All right. Thank you so much, Abdulrahman, for your advices and also giving us an insight into the market and investing. And thank you so much. And you're a colleague right here in the ministry. And thank you so much. And we hope to see you again. Thank you. All right. We want to thank Abdulrahman Almuhanna, an economic content creator. How about we take a short break, dear viewers? We'll be right back right here. And good morning, Kuwait.